Believe it or not, investors in New York capitalize on distressed properties, add value to them, finance the renovation costs. How you can use a renovation loan to purchase a distressed property, force equity, and only put less than 10% down payment on the property from day one. We're at a multifamily property in the Bronx. We're here to talk about renovation loans. These are loans that you can obtain from the bank that cover the acquisition of the property and also cover the construction. These loans are attractive to first-time homebuyer investors, also buy and hold investors. So renovations can include windows, flooring, siding, roofing, mechanical systems, bathroom, kitchens, most cosmetic upgrades you can place into a property. However, we can't add any features that are considered luxury items. So you can't add a basketball court, a sauna, hot tub, my favorite, a barbecue grill. Let's get into some of the benefits. I've mentioned this in previous videos, but I'm not that handy around the house. You're not into doing the work yourself. A renovation loan is great. In addition, some folks might not have the cash on hand, or maybe they do have the cash but prefer to keep it in reserves for other investments. This allows you to finance all of your construction costs into one loan. Another benefit here is forced appreciation. You're purchasing a distressed property, oftentimes getting it at a discounted price. Once you finish all the renovations, it will be move-in ready to occupy it with tenants or move into the property yourself. By the time you close on the property, from what we've seen, folks have anywhere from 10 to 15% equity from day one. Another huge benefit to this is the loan interest rate that you would have for an FHA or conventional style renovation loan is oftentimes going to be a lot less than what a personal loan would be, or a credit card fee, or any other home improvement loans. One of the other big benefits here is that you have a low down payment option. You can get into the property with as little as a 3.5% down payment. With conventional loans, you can get into a renovation loan with as low as a 5% down payment. In addition to this, the loan requirements are a lot lower, meaning you don't need to have a super high credit score in the upper 7s or even in the 8s in order to qualify for a renovation loan. Now, when it comes to a 203K loan, there are two main types. There is a limited and a standard. Now, with the limited loan, the renovation cost cannot exceed $35,000. Of course, looking at this property, a fire damaged property, and this is also a multifamily, so we have 2 units. Chances are we're going to spend a lot more than $35,000 to renovate this property. In that case, we would need a standard 203K loan. Now, one of the main differences between the standard and the limited FHA loan is that the standard has a little bit more of a lengthy process and involves more paperwork. This can be a headache, so if you are going down this route, you definitely want to make sure that you're working with a contractor who has experience with renovation loans. To sum it all up, if you're looking for a loan with a low down payment requirement, low credit requirement, and also allows you to bundle renovation costs into one loan, the 203K and also the conventional renovation loan might be a good option for you to entertain. You want to make sure that you're aligned with a really good team, especially a good contractor who has experience in this space. If you want to find out whether or not this loan makes sense for your plans, or whether or not the market that you're targeting here in New York has enough options for you to entertain, hit the link in our bio to set up a quick call. If you like this video, hit the like button and subscribe so that you get notifications for future videos.